Good morning, traders. It's Tuesday, July the 16th. Taking a look at the charts, start off with the SP 500 futures, and more or less where the markets are continuing to be very strong here. If we look at the 30-minute chart, we're muscling our way up. Over the last several sessions here, we've seen gaps to the upside. If I was to just draw them on the chart here, we've had a gap to the upside. We had over here, we had another gap to the upside. Over here, we had a gap to the upside. Yesterday, it gapped up, sold back down. The market is really getting pretty frothy at this point, and we continue to gap up and hold its ground. We're constantly riding this red hashtag, which means the market is overbought. And it can be overbought for extended periods of time in an uptrend. We're not looking to short ever really in an uptrend. We're looking for something when we get down to some technical level, support level, depending on how it sets up. We're looking for typical bottoms or pullbacks to get long within an uptrend and to not really add new positions when the market is super frothy and overbought and ready for some type of pullback. Now, if we take a look at the market and we look at the daily chart here, this kind of region that we're getting up into is very similar to this region here. If you look at these lower cycles down here, long story short, this big blue line here, when it's up above the 50 level and up in the upper zone here, we are in a bull market. And when this this pink line is in above this 80% level, more or less, when it holds in above this level here, this is when we're in a power zone, a very strong trending market. Eventually, once it breaks, we get a pretty significant pullback. And you can see here, we're in this power zone, continuing to muscle our way higher. Things are just getting overstretched. And at any point here, we could see a pretty decent correction in the market. So you can see this giant rally, and what goes up very quickly usually comes down very quickly. You can see here we had a very quick accumulation phase, and it didn't come back down quite as quick, or maybe it did, but usually the market drops 3 or 4 times faster than it rises. So we got to be very aware. Sometimes the market can drop right out from underneath you. In only 3 or 4 days, you can have months worth of gains totally evaporated. So you got to be very aware and have stops in place when the market gets into this zone here, because you never know how quick the market could drop and how far it's going to drop. Now, if we take a look, let's move over to the dollar real quick. The dollar, this is the dollar ETF. More or less, it's flip-flopping around as it's trying to, if you look at the daily chart, you can see it's all over the place. Still, the trend is up. It's had a nice 3-wave correction to the downside. The 3-wave correction in ABC is usually what cleanses the market. You have an A, B, C. It's breaking a previous pivot low that flushes the market out, cleanses it out. You'll usually see a volume spike as the market, everyone panics out of it because it's making lower lows and lower highs. But as long as you're within the major uptrend of the market, it's a cleansing phase, and then you get a nice move. We've had a nice pop. We've had the first pullback, and the dollar here moved up yesterday. Today, it's set to actually move up very sharply, up almost 0.5% this morning. Surprisingly, gold and silver are holding up still, but that could fizzle out fairly quickly. But overall, the dollar is primed and ready to continue to move up. And this is what we've been waiting for. I mean, the last week or so is to see if the dollar is going to really start to extend and move up for that second target, come up to this area or beyond. If it does, metals and miners are going to sell off and move down. Now, I know if we take a look over at gold, gold's been in this very tight formation. Everyone is bullish on it. I'm bullish on it. But this could break down in a big way. Everyone's watching it. Everyone seems to be in gold and miners, and it's not breaking out. We've got pretty high volume. A lot of the volume spikes down here are big selling volume, and we just got to see which way it breaks. I have a feeling we could see the dollar really pop and extend, and we see all these people who piled in up here waiting for this breakout run. We could see it fizzle out and move down. Now, if it does start to pop and run, we're going to have to jump on the bandwagon, because who knows how far this will go before the next pause. But at this point, we could very easily see the metals flush down. I've talked about it for a while. We could see a consolidation much deeper, and it still could take months for it to break this really significant resistance level. So that's kind of where we are in the grand scheme of things. Now, if we take a look at gold miners, Let's just focus on the daily chart here. Gold miners, you can see they're holding up right at resistance. They're so close to popping and having a breakout move. This morning they are trading relatively flat. I have a feeling we could see a pretty big move in gold and miners here any day, and the question is which way are we going to see a big reversal to the downside with the dollar rallying, or are we going to see a breakout to the upside? Again, if we take a look at the US dollar, I'll just drag over from FinViz here. Look at the green update today in the dollar, up 0.4%. That's a pretty significant move. Again, if this starts to extend the dollar index, we're going to have the first move. We're going to have a nice probably back up to the 98 area, looks like, where the fib extension target would be. It's also resistance. It looks like the same measured move more or less from that low there. You take this distance and you just measure that to the upside, and that brings you up to 98, which is a very significant resistance level. It's also a whole number. So if that happens, we're going to see gold, silver miners fizzle out here, which isn't what most people want to hear, but it's the reality that it could very easily happen, and we're just letting the market work itself out here. If we take a look over silver real quick, silver up 0.5%. Yesterday it posted some nice gains. It's continuing to push up to this 1550, which is a fairly significant resistance area. It's kind of got this pattern where it pushes up and kind of hooks. It picks up speed right near the end into resistance. Gold and silver have done this for as long as I've followed them. You get a move down, and then it kind of consolidates, and then it kind of hooks up right near the end, and then you can see a big bout of selling. And we used to trade this all the time in the bear market. This would happen over and over, even on intraday charts, daily charts. It happens over and over again. And so we got the same thing. We had a sell-off. We've got it moving up, consolidating, and now it's kind of hooking and popping up into resistance. And this will probably be do or die week for precious metals. They're either going to pop and extend and really start to take off, excuse me, or they're going to reverse and sell off and catch a lot of people off guard with a stronger pullback than what many people may be thinking. If we actually look at the silver chart, you can see it's dipped down into oversold territory. It's ripped back up, had a big gap there. And yesterday it squeezed right up into the close above a red hashtag. It's flirting with resistance. It's overbought. And we'll see how things unfold by the end of this week where precious metals lie. I do have a feeling they could very easily be trading at the lower end of the range, which is what no one really is expecting, which is why it could very well happen. Now let's take a look over at energies real quick. Crude oil up 0.4%. Continuing to work itself up. Had a little bull flag yesterday, started to flush out and cleanse itself. This morning seeing a little bit of a bounce. Again, we're still looking for 62 upside potential all the way up to 64. Not really looking to get into crude quite at this point. We need some a longer pullback or consolidation for our system to give us a signal to get back long. But overall, you should still be long oil if you are in it. But it is almost at this target. It's already gone up to almost 61. So once it hits one of these targets, kind of the play is over. You don't really want to try and stretch it any further. If we take a look at natural gas, down almost 4% this morning. It is still in an uptrend. It's flushing itself out. We'll see where it is this morning when it opens. It's got a lot of selling, some pretty heavy volume this morning. It's working itself down. In the grand scheme of things, the larger trend for natural gas, if you look at this bottom indicator, you can see the blue line here. The blue line, as I talked about on the SP 500, when it's in the upper zone up here, you're in a bull market. When it's in the lower zone, you are in a bear market. And the big picture of natural gas is we're seeing lower highs, we're seeing lower lows, and it's starting to roll over. And we wrote an article somewhere right around, actually it was over here, that we're looking for natural gas to potentially work its way sideways for a while and then go all the way down to the 2 level, which could be huge significant setup in another month from now, and it could be the start of something much, much bigger. So our longer term picture is playing out, and short term it's pulling back. It could be oversold today. And ready for a little bit of a bounce. But overall, the big picture here is still working itself lower, and it's starting to roll over. Got to be really aware that this could still go all the way down to the 2 level before it puts in a real significant low for potentially a new bull market to take place. Let's take a look over at let's look at the gold miner, the GDXJ. A bit different exchange yesterday. We saw the GDX, the large cap gold stocks. I'm kind of all over the place this morning, sorry. Uh, the large caps, GDX, didn't move much yesterday, while the small caps did, the juniors here. These ones posted a strong a gain, where the large caps were more or less flat to negative. We also saw silver outperform gold yesterday, and it's outperforming it again today. And it's kind of interesting. I'd like to see how this plays out going forward here, but the money is moving into the speculative plays. They're going into the leveraged, high, fast moving plays, and I'm going to see how that plays out. We're not really having huge volume stepping into silver. If we look at the miners, you can see this last pop, these 4 days, volume is kind of dissipating. So as it pushes higher, there's fewer buyers. So it'll be interesting to see how this plays out. I think it's do or die day this week, where we're going to see a big pop or a big reversal down, and it could set us up for some new trades going forward. Anyways, I think that's about it. Let's look. Actually, let's pull up the energy sector real quick. XLE. XLE again. It looks like it's trying to put in somewhat of a double top. It is really neutral in terms of its long-term trend. It's popped up. It had a pop and drop, meaning it gapped higher, and then it dropped and sold off in a big way. It's gone back up, done the same thing with another type of reversal top up near the 200-day moving average, this red line here. It'll be interesting to see where that unfolds going forward. We do have potential bottoming formation here for energies, but at this point they're trading at resistance and they were overbought yesterday. If we take a look at the short-term signal here, you can see the energy sector popped up trading right into overbought territory yesterday, and of course or the previous session, and yesterday it just sold all the way back down and is working down towards the 20-day moving average. Still trending up. It's still in an uptrend with green bars, but yesterday definitely overbought and at resistance, not a point you really want to jump in and get long into a sector like that. Last but not least, let's go to Bitcoin real quick. Bitcoin back down to the lower end of its range. It's all over the place. This is what we want to see, though, in the grand scheme of things. Let's just focus on Bitcoin here. We want to see this pattern continue to mature. We've had a run, a consolidation, another parabolic spike, and now it's going to chop around, and we'll see where it goes and how it fizzles out. Usually you see a pattern like this start to hook at the bottom. It'll break these lows here, and you see some panic selling, and then that's when it has a reversal and starts the next run up. So we'll let things kind of mature. If you are heavy into Bitcoin, you like Bitcoin, it is down at support. It's going to have another support level down here where these candle lows are. You can see these candle lows there, another one right there. But overall, it is in consolidation phase, and if it plays out and builds a longer base, the longer the base, the bigger the potential move going forward. And of course, this was parabolic. This is signature that it could take a while to continue to consolidate before it goes a whole lot higher. Anyways, that's about it for this morning, and I'll talk to you in a little bit. Bye-bye.